Hello guys, and welcome to another market review. We're gonna kick off by looking at the dollar. So, first thing that comes into my mind by looking at this chart is, are we seeing another deviation at this area? And this sets the high of the month of November, and the remainder price action is probably lower. I think so, not just by looking at this chart, but because how I read the euro and the GBP on the higher time frames. And we're gonna look at the euro on this. Okay, so let me get rid of some of these drawings I had. So the euro has been stuck in this range and it's been very clean to trade. Ever since we had this blow off top and deviation and close inside, and this was caused on FOMC, I've been vocally bearish on the euro and really haven't looked into any longs other than that here. Uh, All these setups have been shorts and it's paid off. So last week, price was here on this candle and I was still waiting for lower prices on the euro and I was able to milk this leg here. However, I was waiting for even lower prices and I was forced to exit my shorts around these lows. I was hoping that price, because of this is very inefficient and it should be easy if the market is bearish, just cut through all this candle. However, it didn't and it stopped short of my target. And looking at the hourly, price formed this range here and you see all these wicks and closes above this low here show you absorption bullish because we have inefficient price action on the left hand side all the way into this target. So if we are bearish, why are we not breaking down? Why are we making all these wicks and closes above? Why are we forming a range here instead of just nuking? Not only did we form a range, but price reversed and it also reversed the direction of the weekly candle. That to me is a massive, massive statement on the euro and the GBP. And when you see an instrument change the direction of the weekly candle on the last day of trading of that week, that strength, in this case bullish, should carry on for the next week. So if you look at the weekly chart, it looks pretty nice, honestly. Looking at the weekly chart, we've just filled some of this large wick and we've closed above this range level here. And also this level, not only because it is part of our range, but it was an SR level here. You see support, break down lower, resistance, and given the fact that we are at the first weeks of the month and we failed to break lower and we reversed the weekly candle and possibly the monthly candle, it makes sense for me to be aggressive and assume that this is the low of the month. And if price somehow traded below this level, I'm fading this. I'm getting long. Because also this move down here is inefficient. So if we have bullish momentum, this level and this level should hold and form the low of the week. And once we trade above the weekly open, I think we should get here pretty easily. This is just 80 pips from the new weekly open that we are going to have. So it is a very feasible target. Also, you could think about getting short here if price comes here, okay? However, as I've explained before, much rather flow with price into my area of interest rather than waiting for price to get somewhere and then behave like I wanted to. So I might get short if price comes into this level and gives me a setup, but I wouldn't risk as much money as I would getting long from the weekly open into this area here. Okay, so it is very clear that I only want to get long, and I think this level here should hold, and I don't think it will come into the monthly open because these lows here, they are quite obvious, and I think a lot of people are going to expect the market to, take them SFP and then trade higher. I think these lows are going to get front run, and probably we mark this, we make this low around this area, reclaim, and then we send it. So this is my scenario, and I'm willing to take this risk. Also, I think that the Fed is going to start buying a lot of short-term bonds on December 1st. That will make the yields tank, especially on the front end. Those drive the dollar. So if short-term yields go lower, the dollar goes lower with them. And the government shutdown is going to end. And I think between the shutdown ending and the Fed buying short-term bills, it's going to make it's going to create a bearish momentum on the dollar, and it could possibly make us trade even higher. So, but for now, I'm only trading week to week and just looking for this level here. Okay. Also, I think that if price did this and reversed instead of going lower, making a bottom around this area, is because someone or the market is already taking that into price. It's pricing already what I've explained about the Fed and the shutdown. So probably we move higher. Now let's move on to the GBP, because this is a chart that we've covered on the previous market reviews, and we've nailed it. So when price was around this area, we identified these lows here as an area of interest, and I got short into these lows, and instead of long in this area, I anticipated that once price came into these lows, because they are so obvious, the market is gonna fuck with the traders that engage in this area, and it would very likely just do whatever I wanted to do before showing us real intention and a clean move. So last week that was exactly what happened. Price was at this area, and instead of making you know, a double bottom or some bottoming formation, it just broke lower, and we were anticipating that this green box would mark the low on the GBP, and probably a move lower and close above the monthly open, the November monthly open, could easily push GBP into the mid-range again. This could happen in a month. This is not being greedy. I think it's going to happen. Maybe next week we only trade here, but on the monthly basis, probably come here, nearly 1.35. So when you are looking at this chart, you're seeing a deviation and close back inside the range. It's like we saw on the euro on both sides, here and here. Moreover, if we look at the GBP, I love this pattern, which is you make a range here and you break down. This is the origin of the breakdown. If price comes back into the range and finds acceptance, probably gonna shoot off in the opposite direction, which is to the upside. And I'm gonna show you on EURJPY. I have this example ready for you guys. Look here. This right here was the origin of a move lower. We formed a range. We had the flush, which was the GBPUSD deviation equivalent, right? And we trade back inside the range. So before we even start closing above the range, just because price has flashed down and quickly recovered the range, it probably signals bullish momentum, and that's exactly what happened. And this here is the market telling you that this area was relevant and a lot of buyers stepped in. So this pattern here is the same thing I'm seeing on GBP. So GBP had this bit of a move lower from the monthly open. It was based on news, I think, but economic GBP data. But it quickly recovered and closed above this range. So we've deviated the range lows and closed inside. We are also traded close inside this range prior to the breakdown. We are above the monthly open, and we have a lot of upside potential. So I think it doesn't make any sense to look for shorts here. And if it doesn't make any sense to look for shorts, then it does make a lot of sense to look for longs. So look for a bottom. This my play for next week would be to look for a bottom in this area here. And I think we target these highs at 1.33. And I think this low should hold, and any price action inside this range is going to break out and make a straight higher. Okay, so that's euro and GBP covered. Let's move on to gold. So let's look at the monthly candle. Yeah, we saw gold chill after this huge breakout and peak euphoria here. I think gold is gonna do great in the next year. I think 5K is totally within reach. We've had 2 weeks of cooling off and selling off, and last week we didn't go anywhere. So notice how on this week we had a flat uh, open, flat weekly open candle. So when we look at what price has done, it first created a range around this area. It broke lower and it's created a range in this area just above the October monthly open. I was waiting for price to come into this level to get long, as I didn't think that the October monthly candle was going to close negative, but it didn't come this into this level. Last week we only saw gold compress, and because we've had many attempts at this area and we are seeing gold compress in this triangle like structure, and we have a where's that candle, the flat open? Yes, because we have a flat open here which tends to be a magnet for price. And on the bigger picture, we've already covered euro and GBP. They are bullish. Therefore, if gold is also showing signs of picking up bullish momentum and breakout could happen next week, then it's all lining up very nicely to think that this is going to break out of this level, and it should probably trade into this weekly open. So I think gold is going to go up next week. In general, next week looks like a week to get short the USD. So you choose your instrument that you like the most. But going to this setup, how am I going to engage long? Well, there's two scenarios. We have the monthly open here, and we'll have a new weekly open around this area. I don't want to see price break this trend line. So this should happen on Monday or Tuesday. The move to the upside should happen quite early in the week, in my opinion. And I would say I don't want to see price break these lows. And yeah, I want to see something like this. So maybe give it some room here. The moment it gets above the weekly open and the monthly open, that's your sign that we might have already made a bottom. But more specifically, since this level is a pivot here, if price breaks out, given the context of bullish of bearish momentum for the dollar, you can safely assume that this is a breakout because you've been building this momentum here, and it should hold. Okay, and this should not be a deviation and close inside, because if it does that, then you're going to know very fast that you're wrong. Okay, but I'd much rather play the longs on GBP and euro than gold for now. But I think this target is within reach for next week. I think it will happen. Okay. Now let's move on to AUDUSD. Again, I mentioned my concern that price was going to fill this gap, and it did. And the real question was not if it was going to fill the gap, which was obvious for me, but what it's going to do once it does that. So it gave you a bit of a bounce, which was expected since this range led into a breakout. However, once it gets inside, that is not a good sign. For AUD to be bullish, you will need to see it really break out of this range and also clear the monthly open. Around here you get bullish AUD, really. But not until it breaks out of this range. I mean, it could be here for next week doing this, just like it did here. So AUD is not something I want to trade for next week, because I think a lot of chop is to be expected, and probably the monthly open should give some rejection. And it doesn't make sense to play the longs here when you have clear euro and GBP and gold longs setting up. And you know, if it spends too much time here, probably I think it would break lower. Especially because when we look at Euro AUD, I mean, Euro AUD was sitting at range lows, and that was our signal to not get bullish AUD USD. And right now, Euro AUD is still in a range, really, still in a range, and it's at the mid of the range. So that's why, you know, I only step into play Euro AUD and AUD USD when I see them at extremes of a range. They are not good for intraday trading, in my experience, when they are, you know, doing whatever in the middle of the range. So we had this gap, and this was our target for the long on Euro AUD. And we also have a flat open weekly candle here. So actually think that Euro AUD, you know, could pull back, but I think it's going to hold and probably trade higher. I don't know whether it goes to range highs or breaks lower. If I had to bet, I think it probably goes up before going lower. And we've seen this low get run 1, 2, and 3 times. SFP and then leads to a move to the upside. So I'm just thinking, wouldn't it be funny if we run these highs again and then we go into range lows again? I will be stepping up to short here because the Euro AUD and Euro New Zealand, they are pairs who tend to move extremely well when you trade them at swing highs or swing lows, and they tend to take the previous high and the previous low all the time. They always run those highs and those lows. So you could sometimes just get in blindly with a limit, and you know. But we'll revisit this. I mean, the only real setup I'm willing to take on EURUSD is short from here, because if it comes here, I think it's a gift, and you probably ride the trade into these lows. And as I've mentioned here on Euro AUD, I'm still waiting for the great long to be at this area, which was the origin of this whole move. So short from here is my preferred play, and long from here. And because we've deviated this low 3 times already, I'm no longer entertaining longs from this area. I think I'm just asking myself how many buyers are there at this area. You know, the more times you test it, the less there are. So these are my 2 scenarios. So let's move on to Euro New Zealand. Oh man, this one's funny. Um, New Zealand has been getting smacked. There's no other way to put it. Uh, Last week we had this whole move up, barely any pullbacks, and I'm thinking that maybe Euro New Zealand could pull back from this area here. Maybe the high for next week is in already. I don't know, because I'm expecting a bit of bullishness on EURAUD. I don't know if it runs these highs, but if EURAUD did that, you're very likely going to have Euro New Zealand do that. So I have a similar play inside on Euro New Zealand, and that is to fade a spike into this channel and this level here, and probably cool off and come back into this level here. So this is my preferred play. Also, if we look at Euro New Zealand, it's just approaching very dangerous levels. I mean, it looks like this is getting depegged, and maybe around this area we see intervention on the New Zealand dollar, and we see the start of a downtrend, uh, and then maybe Euro New Zealand is no longer the easy long, and it just starts being a better short than Euro AUD. I'm just being very picky with it. That's why I only engage in the extremes in these charts, really. But I mentioned this just to show also how I like to trade the AUDUSD. So next week on AUDUSD, nothing really setting up nicely for me, and this is not worth looking at when you have very clear plays somewhere else. Okay. Now let's finish the review by looking at USDJPY, because I've been following this one ever since we had this gap to the upside here. So yeah, the thing with USDJPY, a lot of people have been vocal about how we need to close this gap because they can't remain open for that long. And you can be sure that a lot of people have tried to get short around this area and they've been squeezed. Now we've been very patient with this one, and we identified this zone here and this horizontal level as pivotal. Right. Clear resistance on the left hand side, and we saw this 2 weeks ago, origin of a down move, resistance breached, and for the past week we mentioned how this level should hold, and it gave us a perfect retest of this level and a bounce. That bounce, however, got stuck at the Tuesday highs, and it broke below the monthly open, and it's now trading at these lows again. This is not good for USDJPY, because I think this is showing weakness, and I'm not a gen trader myself, but given the all the context I've given about how the USD is going to perform poorly on next week, these lows are in danger. I think I think that USDJPY should do something like this, or maybe just, you know, maybe it doesn't need to run the monthly open, but the moment it gets below this zone here, which was our pivot, any retest is something you should sell, okay? Because then you've had this act as support, this zone act as support, and right here is very messy and very choppy. How long is this going to hold? Especially if next week we see EURUSD go up 150 pips or something like that, and gold. I think this could come lower. I'm not saying it should fill the gap, because the gap is quite far, but if it breaks below and you get short here, you are aiming at least at these lows, and then this lows, this zone here. So you have, in my opinion, two take profit zones here and here. And I think this area here, because it was the origin of this move up, and here we had a range, it's going to offer a bounce. So you know, this is a massive move already. Like, this is 250 pips, which can happen in a week, but you know, you're not gonna have a week of 500 pips. So this is why I would take profit in these zones, especially because this one is going to offer a bounce 100%. So these are my preferred trades, because you know, we're gonna have a weekly open around this area, right? So the moment price trades above and closes and trades below the weekly open and below this level, very likely the high of the week is in, and we're going to trade into this level at least. Okay, so that was everything I wanted to cover, a bit faster than other days. That's good. So let's make money next week. I think I've got a good hunch. So let's get it. See you next week. Good luck.